Morning, people. Let me know if you can hear me. Comment if you like my beard. Comment if you hate it. The Movember's going strong. We're 9 days in. Uh, just let me know if you can hear me as we start this because today is November 9th. It's Thursday. Tomorrow's Friday, right? That's how the days go, and we're into the end of the week as markets have consistently being bid up. So when we look at this, right, there's some news that's trickled in over the last bit, but nothing really that crazy. One of the main headline figures that's set to come out next week is going to be the CPI data, which is why a lot of people are kind of in a range motion, right? Like kind of just holding things out as the buy side continues. No real sellers have stepped into the market. Rather, a lot of big buyers have been entering this. So the way I see this is that we have some continuation of the upside, right? That could be disturbed by the CPI that comes out next week. But first and foremost, right, U.S.-China relations and ties, right? A new relationship, is that what's in the midst? There's going to be a focus as Treasury Secretary Janet Yellen hosts Chinese Vice Premier He Lifeng today and tomorrow to discuss topics including U.S. concerns about Beijing's trade practices. And Yellen has repeatedly insisted that the U.S. is seeking healthy economic competition, which requires a level playing field for American firms, while Chinese counterpart Han Zheng has recently indicated that ties were improving. So Yellen's meeting comes ahead of a much-awaited summit between President Biden and Xi Jinping next week. And will this meeting lead to a decoupling, right, de-risking, or a new economic relationship between the world's largest economic powers, right, general superpowers? So the U.S. economy has been going pretty strong amidst all of this, right? So far, we've had a pretty stern rally into the entirety of 2023. Right now, we've got about, I think, between 30 and 40 trading days left until the end of the year. Before we wrap things up, we announce Christmas and New Year's and other holidays, so on and so forth, and we jump into 2024, where things are expected to get rocky. I think a lot of people are still riding that optimism and euphoria from the strength in the economy and the stock market this year with high rates, inflation trickling lower, and these things are lagging effects, right? So generally speaking, we probably have 1 to 2 more quarters before we start seeing things potentially hit the fan. So in terms of other news, yesterday we still had a constant bid. Markets drooped slightly before we saw some rallying into the end of the day, right into the pre-market here. We're sustaining, and we're going to break down some trade plans, levels, and ideas, and progression for the market at the end of this little news breakdown, right? There's not much that I'm to talk about because we've just have massive amounts of Fed speakers, right? Yesterday, Jerome Powell, I don't even know what he spoke about, to be honest, but there was a bunch of Fed speakers that spoke yesterday. It didn't really move the market. If anything, yesterday was the slowest price action I've seen in a very long time until we hit some stride in the middle of the day before, again, it became slow again. So General Motors is in headlines again right after we saw that United Auto Workers striking fiasco over the last few months, right? So General Motors self-driving unit, the Cruise, right, is recalling 950 driveless cars across the U.S. and may file additional recalls. So soon after its decision to temporarily halve production of the autonomous Cruise Origin vehicle. The recalls are being done to update the collision detection subsystem of the Cruise automated driving system software, which caused a collision with a woman in San Francisco who was then dragged for about 20 feet, right? That's a lot. The software wrongly characterized it as a lateral collision and directed the robotaxi to attempt to pull over out of traffic, pulling the individual forward. Soon after the incident, California suspended Cruise's permit in the state, I should say, eventually prompting the company to pause all operations. So I didn't even know these were a thing, right? These self-driving autonomous vehicles, but clearly a lot of bugs to work out. This today, in terms of news, there's nothing really much that happened over the last evening session, but we have a Fed Bostic speech, which comes out at 9:30 right at the opening bell, interestingly enough. We have some EIA natural gas inventories. We have Fed's Barkin on the outlook for U.S. economy and Fed policy at 11. Fed's Kathleen for U.S. economy and monetary policy at noon. These are Eastern times, by the way. And then we have Jerome Powell at 2 p.m. today. So yesterday he spoke. Today he's going to speak some kind of speech. Am I necessarily aware of what it is? No. But let's see here while this loads. But generally speaking, I'm still a believer that we're in a cyclical low area over the next 2 weeks for oil. I know we talked a bit about that yesterday. I had some options for a day trade yesterday off the open, did pretty well. But I think that in the coming days, right, I think we're going to start finding footing in oil, which is something that I am very looking forward to in terms of opportunity to have some swings into March, April of next year, right? Those are my expectations. I think we got about a 80 to 100 day cyclical low that allows us to see some kind of upside pressure in oil. Now, I don't really know what this speech is about from Jerome Powell, but that's besides the point here. What we got in terms of the equity market, let's look at our trusty volume profile here. What we've seen is just a acceptance of distributions higher, rotations higher, right? Ever since we opened this week, it's just been constant bid. This mid 60 has held very well. We're coming into the top block of this distribution between 4410 and 4414, where I'd expect some kind of resilience to the upside, where we could see some kind of sellers try to open this up. And I think that this becomes a minor pullback, a profit-taking pullback for longs to enter into the market, where I'd be looking at 4403s to start. It's a very shallow pullback, but ultimately, as long as we open above 4390 in and around that area, plus or minus 2 points, I think that sustains a decent bid in market. So profit-taking is welcome to see if they can reload that bid again. Under the 4403, we start getting into mixed territory, but if they offer under 4390 today, I'm going to be pretty diligent with these longs and look for more of acceptance to the downside. I think that today is one of the last attempts before the CPI that downside can open up. Tomorrow's Friday, generally Fridays, right? And as you saw last week, it did have some news, but it was very euphoric. And then into the beginning of next week, right, until we have that CPI that comes up pre-market, I think that there's going to be some very muted trading. So sellers, right, here's your chance. I presented to you on Thursday. We'll see if they manage to hold that out or what comes of that. But generally speaking, right now, buy side still very strong in this market. So levels stay consistent throughout this week. They keep trickling up. I would like to see some kind of profit taking to pull prices lower for a more acceptable level to start bidding into. So that's what I'll be looking at today. With that being said, we're going to open up our live trading room for our traders in the futures room right now, and I'll see you all in there. Check out community.tradeproacademy.com for more insight as to what we have at TPA. I post plans in there every day. We chat and so on, and I try to help you out as much as my time permits. So let's do this. Let's wrap up the week tomorrow and get ready for CPI next